The biggest mistake I see beginner cryptocurrency investors make is that they treat it like gambling. They treat it like betting, sports betting, or gambling at the casino. They don't treat it like a serious event. They don't look serious enough at the fact that they're putting their hard-earned money that they worked hard for out in the world into some sort of project that could or could not grow in value and market cap. When I tap into people and talk to people about cryptocurrency markets, blockchain technology, most of what I gather is that they're thinking of this as a gamble, as a bet. In fact, many of the people I know, my friends, are bigger into, let's say, sports betting than they are investors of cryptocurrency. And they have fun with betting during the football season, no matter what season it is, basketball season, baseball. Sports betting has taken off like crazy. I was in a conversation the other day with a group of my friends, and they're talking like heavy about sports betting and how they actually take it really serious to where they would want to make money from it. I'm not a bettor. I don't like to bet. I don't like to gamble my money at the casino. I might go for fun here and there with friends with, a small amount of money, but I'm not going to the casino with the intention to make money. In fact, I was at a local casino near where I live, and I talked to a lot of people there about whether or not they were there for fun or if they were there to make money. You probably can guess that most people that are there are actually there because they're hoping that they make money, that they're really not there just for fun. You can disguise the fun part of it with the thrill of making money, and I think that's what most people do. And it's like the unspoken rule that the house always wins. It just so happens to be that the beginners have something called beginner luck. So they come in, they invest, and they get lucky, and they win. And it's almost a curse because they then think that they're skilled at this and that they're just going to continue to win and continue to make profits. And what happens is the house in the end will prevail. This is how I see people treating the cryptocurrency world. There's a few stories that I'll talk to you about. Take, for instance, this one guy that I met. He had this sort of epiphany. He's a regular guy. He works at a tax place like H&R Block or Quicken Loans or something like this. This was 7-something years ago. And he woke up one morning and thought that he had this dream to go ahead and invest money in a certain cryptocurrency. And he did. And he invested a substantial amount. I think he put like $30,000 into this, which is just an extremely large amount of money. In his mind, almost like he was compelled, as if he was going to win some sort of lottery ticket number. And so he did. And then what happened was that actually grew. He just happened to put it in at the right time. That grew to about $300,000. He had this beginner luck, right? He came in, beginner, didn't really know what he was doing, kind of Hail Married an investment into the market, and it swelled 10x. And so he was then cursed, if you will, with this beginner's luck, and over the next couple years had squandered that entire growth and actually even lost more money than he originally put in, which leaves him feeling upset and very depressed about the situation. And then what happens is these people or gamblers, right? They then want to get even. They feel like they deserve to win. They feel like they deserve to get even. If they just continue to hope and pray, they're going to make the winning number. They're going to win. They're gonna all of a sudden become extremely successful and get rich. This is the biggest mistake I see beginner cryptocurrency investors make. They treat this like gambling. They treat it like the casino. And if you're going to treat it like that, okay, these markets are going to win. The house is going to win in the end, and you're going to lose your money. You're going to be whipsawed out of this market, shaken out of this market. It's going to feel painful. My big suggestion is to treat this serious, not like a gamble, not like a bet, like a sports bet. You're not trying to gamble your investment. You should be investing with a sound, fundamental analysis of what this project is, so that you know where this project is going, what their roadmap is, what their team is like, reading as much as you can about this project, so that when you put your investment in, you feel a lot more confident about what you're doing. You should not have the feeling of a gamble mentality, a hope and a pray, for two reasons. One, that feeling isn't sustainable. It doesn't last long. It's a nervous feeling. You're constantly going to be pulling your hair out, looking at these investments constantly. What's going on? Is it going up? Is it going down? These markets are volatile right now. There are 60% swings and 30% drawbacks that happen overnight in this game. Okay, this ecosystem is in its beginning. It's the Wild West. It is a mountain of movement occurring all the time. So by investing some money, a little bit or a lot, even worse would be that if you just began to invest a lot of money that then a week later goes 30% down, that could be extremely painful to see. Now, if it goes 30% up, of course that's going to feel fantastic. But then what happens when it drops 60% in a week or two or a month later? This is when most people get whipsawed out of their position. There was another guy I met who put a lot of money into Bitcoin at the bull market of 2017. He puts his money in at around the $20,000 mark with the hope that it was going to go to $100,000, which was at the time what everybody was saying. See, the people who invested 3 years prior and got their position at pennies on the dollar were selling their positions at $20,000 to investors like this guy who were coming in with a hope and a prayer without any kind of research or due diligence or analyzation of what he was even doing. He's just saying, oh my God, I'm throwing my money into Bitcoin. And then he went on to vacation for 2 weeks. He goes to vacation and then he comes back and doesn't really check the market. He doesn't check his investment, which was substantial. It was under around $50,000, which gave him over 2 Bitcoins, 2.5. He's thinking, what's the problem here? I was going to go to $100,000. And then what happened was that valuation dropped down. Before he knew it, to $9,000 a Bitcoin from $20,000, losing over 50%. And then in the next few months, dropping all the way down towards $6,000 a Bitcoin. And see, the ironic thing is that what people tend to do is at that moment sell. So now the guy finds himself selling at $6,000, liquidating his position, and that's what we call being shaken out of the market. It's too painful. You think it's going to go to zero. How you can't possibly lose all of your money. So as it drops over the agonizing next 6 months or the 9 months to 18 months of a bear market lifespan, you're painfully agonizing every day about how you're losing money and it's going to go to zero. So you then sell out at $6,000. And then a couple months later, it goes to $4,000 and you're like, thank God I sold out. You took a massive loss, but you're like, at least I didn't lose that much. And then it drops to 3,000 something. And you're like, whew, great thing I didn't lose even more. And fast forward to the next bull run where that same 2.5 Bitcoin, had you not have sold it, had an all-time high of over $60,000 a coin. I wonder, I don't know the guy personally, it was in conversation. You know, I talked to a lot of people and this was just over conversation. I wonder what he was thinking when it crested $60,000, where his initial investment in 2017 would have tripled. See, if he was thinking and understanding the technology of blockchain and Bitcoin and invested in this for the long haul, he might have done things a tremendous amount different. And that's what we all say. We all say, hindsight is 20/20. If only I knew this, I would have done that. Give me a second chance. See, if the guy would have really put his time and his research and his effort in, he would have perhaps invested a small amount, a very small amount, or not even anything at that $20,000 mark, where he's being encouraged by his friends and he's encouraged by by media, and even the news is talking about it. It's what they call FOMO, fear of missing out. And there's this bizarre nature where investors FOMO in at the wrong time. They come in at the top. They buy when the price is already high, and they sell when the price is low. Competent investors, smart investors, are doing exactly the opposite. They are buying and positioning themselves when the market is low, when nobody's talking about it, when no friends are talking about it. They're buying then. They're positioning. There's an accumulation phase. And then they sell when the price is high, when the price has gone 10 times higher. They're selling to those people who are now buying in at the FOMO stage. So don't let this be you. That investor who invested all that at the $20,000 mark, if he would have just kind of sat on the sidelines, watched things, put a little bit in, and then waited and cost averaged, he might have been able to accumulate more than 2.5 Bitcoin if he would have cost averaged his way through the entire bear market, through the decline, and saw the decline as an opportunity to get positioned more, because he was reading the Bitcoin white paper. He was doing his due diligence. He was doing his research and being affirmed by his investment through the confidence of his analysis. Because this is hard worked money. That is a small example. There are people that have lost tremendous amounts of money. And in my view, why I don't bet, why I don't gamble, is because I don't want to lose $1. I want to think of capital preservation. Now, I'm okay to take losses. Actually, at that same exact time, that's when I began to seriously invest in the cryptocurrency space at the very top of that bull market. And that's what I did. I started slow, barely at all. $100 is what I put in. $100. And I began to research and start to understand concepts like, what is proof of work? What is the Bitcoin halving event, right? What is this? This is what I began to understand, study, and learn. And over the course of that bear market, I accumulated, cost average, took my time. So it's a position game. It's a long game. If you are in this for the longer game, where 1 year is a short amount of time, 4 years is a regular amount of time, 10 years would be a healthy amount of time for you to have in your mind how you can gauge your time. There are rogue events where you just kind of come in and you get lucky, but then you have to really be cautious. Because sometimes that luck can be a deceiving fool, take you in other directions that you don't want to go to, where the house will always win. So doing your research on things that you invest your money in constantly is my suggestion to you. It is by far a better strategy than this hope and pray and come out of vacation and not look at stuff. Take, for instance, Wingriders. Wingriders is a decentralized exchange that I've been participating in and did a video about, and is another project that I'm invested in. So I constantly am checking up on Wingriders to see if they're progressing. If there's anything that sort of goes on with Wingriders that's negative, that's risky, that they're burning their tokens, or some news comes out about them, I want to know about it, because I might want to remove my investment before it's too late to remove my investment, which would mean that the price of Wingriders would go way down, and maybe my investment, my value will be lost. So if that's the case, then I want to understand. So Wingriders is just one little example of a project that I like to track. And the best way to track the projects that you invest in is you go to their website, and on their website, this is their application here from their website. So if you go to wingriders.com, there will be a button to connect to their app, which we're on now. You can click their Discord and get into their Discord, and I'll take you to their Discord, Wingriders Discord. So as you can see, I'm not a part of every single Discord that I'm invested in, but mostly SundaySwap, MinSwap, Clay Nation, Cody, Liquid, Cornucopias, Meld, Genius Yield, Pavia, Wingriders. And here is one of their announcements. Why is it important to do your own research in DeFi, crypto, and financial services. This article, we cover counterparty, market, and manual risk. When I see something like this, it makes me feel like my investment in this project is a good move, because they're actually telling you to do your own research. So I know about this, but they're telling you to do your own research. They're not trying to hide and hope that people aren't doing their research. They must be doing something good. They must be doing something where they are proud of what their product is. And so if we click this link and go to the Medium article here, where we'll try to check that out. Okay, here we are. The importance of doing your own research for DeFi services and DEXs. It's only a 5-minute read. You can even listen to it if you don't like to read it. Decentralized finance, DeFi, is revolutionizing the way people invest and manage their finances. And it's no surprise that DeFi services such as token swapping, providing liquidity, farming, staking, lending, borrowing, and much more. All DeFi services are becoming increasingly popular. However, the growth of DeFi comes the need for users to be vigilant and responsible when it comes to researching and investing across each of these DeFi services. They say that in this article, they're going to take a closer look at why doing your own research is important to the world of DeFi, and why Wingriders.com can be a great platform to consider. So they're writing you an article about the importance of doing your own research. That to me is a positive sign that my investment and my participation in Wingriders, where I'm providing liquidity, is a positive move. And you can check out my video on providing liquidity and utilizing the power of DEXs. Don't take my word for it. In the video, do your own research. Okay, so why is it important to research? The decentralized nature of DeFi means that users are in control of their own assets and decisions, and there is no central authority to oversee or regulate the market. This makes it essential for users to be proactive in researching and evaluating DeFi services and protocols before investing their money. Right? It's exactly what I was talking about. See, when we interoperate with our banking, they call it TradFi, traditional finance, our regular banking. The bank does all of the holding of our money and the transferring of our money. They do all of that, and you don't really do anything. You work, your check probably gets directly deposited into your account, and you pay for stuff with your cards, your credit cards and whatever, your debit cards. That's how it works. So decentralized finance is a little different, where you are making decisions. You are connecting with your wallet and exchanging your assets. Now that could seem like a tall task. It could seem like more than you want to bite off or more than you want to chew. And I submit to you that it's very liberating. I was not a financial person. I was not a tech person. I still am not a tech person. It is natural. It is a natural thing for you to manage your own stuff. And this is the revolution that's happening with decentralized operations, whether they're DeFi or governance or gaming, where you, even in like a gaming solution, are taking more responsibility in the game. There's projects called Cornucopias, where there's an economics to the game, where you are going to have to upkeep your land, just like you would your house, with your keeping up the grass and the shrubs and the landscaping and the trash. And you gotta keep up your land plot a little differently than in a regular game, like on PlayStation or Xbox, where there's none of that going on. See, there's an economics, there's a decentralization movement happening, where you get to take more control over the decisions you're making. So because we don't really understand that, we just kind of put it in to the DEX. We provide it like we provide our check to the bank, and then we just kind of forget about it. So this is the biggest mistake. I'm not going to read this entire article. There's a DeFi counterparty risk, where it talks about the counterparty risk occurs when an exchange or DeFi platform gets hacked, loses users' assets, or is presented with other situations that might force the exchange or DeFi platform to default on its commitment and hand over its customers' assets on demand. So you have to pay attention to what kind of DEX you are participating in. There is a difference between centralized exchanges, like the big debacle that just happened with FTX, where people just put their money on there and kind of hoped and prayed, trusted the centralized nature of that entire process, and they find themselves on the receiving end of the user agreement that tells them that they don't have their funds. Doesn't feel good. See, these decentralized exchanges, if I'm participating in any kind of a product, I want to know if it's being audited, right? So here it says, finally, Wingriders was audited by CertTech. So you know what I do? I research CertTech. I'm like, what are they? Are they even credible? Yeah, they are credible. They are leading the Web3 blockchain and smart contract security firm, providing a security leaderboard, a tool that ranks Web3 projects on security risk based on a range of on-chain security primitives. That makes me feel a little bit more confident about my decision to participate with Wingriders. I want to know and see if they are being audited, dramatically audited. If something is hiding from audit, then I don't want to invest in it. And they're going to go on and talk, and I suggest you get on wingriders.com, look for yourself, research the team, look at some of their Medium articles. Look at it says Wingriders Discord right here. Boop. Get on Discord. They're not trying to hide. Get on their Discord. And taking responsibility for your own actions. It is important to remember that you are ultimately responsible for your own funds and the way you use them. This means that you need to take care across all DEXs, wallets, and available services, understanding what each potential risk is and how best to mitigate potential loss, human error, or being a victim of fraud. It is best to always do your own research and consider as much information as possible. I couldn't agree more, and it makes me happy that a project that I'm participating in is taking the time to even tell you to do this. Do your own research. Check to see whether or not the apps and the DEXs that you are in are doing any updates. So for instance, here on Wingriders, this happened like 2 days ago. In their pool section where they have pools, they've now implemented this feature here. Go to pool details. In their Discord, they released information that this now exists. So now when you go to the pool, you're here confronted with a chart that they have put together. It's a new feature that shows the tracking of these assets, the total value locked up, the volume. So each green candle here represents a positive volume, and this is negative volume. So you can see on March 12th, 2023, there was a lot of positive volume coming into the space. Okay, so there's total value locked up. You can change from this line to candles. Okay, you can put indicators on it. You can change it from a day to a week. This is the weekly. All right. You can add liquidity right here. You can click the swap button and begin to swap. This is a new feature that I'm actually looking at for the first time in real time with you all here. It's something that I'm going to play around with, right? With some of these projects that I'm in. And it just feels good to me that they're updating. This is a new feature. So they're integrating TradingView with their DEX, and for Wingriders to do this, it means that they have been putting in a lot of work. It means that they're working hard to bring a great product to everyone. That to me feels really good. It shows that they're working. It shows that they're doing stuff, bringing new features, because the chart action here is a way where you can execute fundamental analysis, which when you get more into this space and more into the markets, you will be utilizing TradingView. I have it right now on in the background on my other computer. TradingView is always on, and I'm constantly looking at my TradingView charts using these indicators, and perhaps I'm going to do a full dedicated video on that soon and upcoming, so keep your eye out for that. So this is positive here. This is a positive sign that, okay, I'm making a good investment in Wingriders. If I get word that a project is becoming insolvent, well, then I'm going to move myself out hastily. Dana is a perfect example. Dana was a promising project. It was a promising project doing big things in the space. And then out of the blue, they're like, they didn't even like put it out. It kind of got like leaked out, and they were sort of trying to hide the reality of the fact that they were becoming insolvent because they had attracted a lot of investors and they didn't really want to come clean, and they were a really young team. And unfortunately, they began to break apart and break away. So if I look at my participation in Dana, I was investing in them since before this epic 333. Then I realized what happened, and right away in epic 376, I moved out of this position. I liquidated Dana, and I didn't incur that big of a loss at all, actually, because I moved right out the moment I heard about it. The people who were hanging out on vacation, just not really caring about their Dana tokens that they're investing in, thinking that they're just going to go up. I mean, literally over the course of the next couple weeks and days, the value of Dana went way down, almost to barely nothing right now at this point. So yes, you would have lost your money if you're just not doing your research and keeping your eye to the streets, okay, and keeping your ears to hear. So this video is to help you not make that big mistake that beginner cryptocurrency investors make, where they just gamble, where they're gambling it up. They are throwing a Hail Mary of an investment, kind of like a sports bet, kind of like a casino bet, maybe getting a little beginner luck here, which ends up not being a good thing. It actually is like almost a curse in a way if you all of a sudden have this super successful experience in the very beginning. So I thought it was fortunate for me to begin my investing process and my research process at the height of a bull market. I had no idea where it was going. I thought, like everybody else, wow, it could be going up to 100K from this $20,000 mark. I wasn't willing to just go ahead and risk my money substantially for that, because I work hard for it. I have responsibilities. So you do your research. You start with doing your research before you ever put your money in, and then you continue to do your research. This is the big mistake. They don't do their research to begin, and then they never really do. Very small amount of research, very small amount. And I will submit to you that it begins to become fun. It's a fun activity to do that. It only takes 5 minutes here or there to understand what's happening with projects you're investing in. So I hope this is encouraging to you. I hope this could prevent you from being whipsawed and shaken out of these markets, as they are volatile. They are high risk. So you must do your research. And if you do your research, you will build confidence. And that confidence will allow you to make sound, sober decisions in the long term, in the long game mindset. Not 6 months, not even really a year. You're thinking more like 4 years. That guy would have waited for if he had that 4-year, that $20,000 investor who lost it, sold out at like around $6,000. If he would have just held on, he would have tripled his money. And if he would have just held on and continued to cost average in, he might have at this point 5, 6, 7 Bitcoins or whatever. Okay, so if you are investing and you're taking the time to get into it, then give yourself the respect of doing the research, taking the time. Because time is money. That's what they say. Time is money. So invest your time and money will come over time. Cheers. See you soon.